Do you see parallels? Is it a worry for you?
Well, we're still a very highly indebted nation. Property is the epicenter of leverage, and the fact that we have the flight to quality is normally a flight towards liquidity and away from highly leveraged assets. It's little surprise that it is the pound and the UK housing sector that are in the epicenter of this divestment crisis. I think the fact that we have so many property funds closing in such a short space of time after the referendum shows the extent to which the political risk and the financial shock of the political risk were underpriced in financial valuations, but it also shows that to this point the pound's weakness is really a testament to the fact that the rest of the world is disinvesting from the UK rather than a reflationary. It's a decapitalizing rather than a reflationary signal, and that's a very worrying thing, because it means that the fact that we have record low gilt yields, and look at Manus looking at the gilt chart.
Yeah, I mean, you talk about that. This is Anna's discovery in the Bloomberg terminal. What we've got is a heat map, really, of the
I take no credit for the heat map.
I give credit where it's due. But I mean, if you go onto your Bloomberg terminal and you look at the gilt waves, you look at these graphs, what you see is this period right out here at the far distance. This is the 30-year paper in the government bond market. Down we went in terms of yield, the yield collapsing, the compression.
Around the 23rd of June.
Around the 23rd of June, around that period of time of the referendum. Money is continuing to go into gilts. Gilts have returned 14% in 2016. The spread between 30-year paper at the far end of this heat map and the close paper is the narrowest since 2008. The question is this: does the world continue to buy gilts, given that we are such an indebted nation with a current account deficit which is under pressure?
I think it's a flight to safety. It's a flight to liquidity from the very funds that are seeing outflows from foreign investors. The fact that gilt yields have fallen to such levels and yet this is yet to reflate UK markets shows that it's a sign of the markets collapsing. It's a sign of low yields not working for growth at the moment, rather than a sign of reflation at this point. It could be worse, of course. We could be seeing UK bank stocks falling and gilt yields rising, which would be the default scenario. Right now, we just have a deflation
Just
scenario.
give us that default scenario again, which would be?
Bank stocks falling and gilt yields
rising. Which they already are.
Which they already are.
And gilt yields are not rising yet.
Right. So the fact that gilt yields are falling shows us, well, it shows us two things. First of all, the financial risks, systemic risks to UK stability have risen. The result of that is that markets are pricing down what they estimate to be the neutral rate for the UK economy, but also the fact that this is happening globally. Bond yields are falling to record lows globally shows it's not just a UK story, it's a global systemic story, of course, the UK being one of the biggest hosting one of the biggest financial centres in the world. The second one, of course, is a signal of the fact that the Bank of England has expressed a willingness to do whatever it takes to contain the contagion from this Brexit, and therefore the bulk of the default is going to happen through a cheaper pound rather than through a higher gilt risk premium, which is the better shock absorber, I think, for the financial system.
He was describing that fall in the pound as necessary, wasn't he, Mark Carney at the Bank of England? So if we've seen the expression of risk surrounding Brexit in the pound so far and in real estate markets, if you're looking for other places where we might see this expressed, other dominoes to fall, are there other asset classes that you look at, Lena, now and you think, well, it could move here? That would be the worrying next step if it moved to here.
This is it, exactly. It's in the highly interconnected financial system that we have, and what we have seen in the last week is first that the financial contagion from Brexit is not over yet, and the second one is that it's not contained to the UK. And so the domino effects here are we look for vulnerable credits elsewhere, and there's one in particular that should bear more attention from the markets, and that is China.